Welcome to Beyond the Expert, a production of AGORACOM in which we speak with small cap market investors and experts about what they're seeing in the markets. This is our Thanksgiving edition, and for the first time ever, we're in front of a live studio audience. Today, we welcome venture capitalist Leigh Hughes. He's been on before and backed by popular demand. Why is that? Whereas our popular product, Beyond the Press Release, tells the stories from the side of the issuers, the small cap companies. Beyond the Expert tells the stories from the perspective of the experts on these topics. And they're a lot more cutthroat because it's their money on the line. And given his track record of success, we can't think of anyone better to keep having on the show than Leigh Hughes. He's a venture capitalist who I've personally watched conduct incredible due diligence. I mean, some of the best stories out there that everyone's celebrating today, Leigh found 18 and 24 months ago when they're orphaned and ignored. So that's due to his incredible due diligence to discover and invest in these small cap companies that have generated some pretty incredible returns. He's so good at what he does that many global private equity funds and institutions not only take his call and try getting that done, ask any small cap CEO how difficult that is, they often follow him into investments that he chooses to make. And moreover, he serves as an advisor to several small cap companies. So if you ever wanted to truly learn about how to become a great small cap investor, it doesn't get much better than this. Leigh, welcome back, my friend. Happy Thanksgiving, even though you're an Australian.
Yeah, no, to you too, George, and everyone watching.
Hey, so today the big topic, but we're not going to get to it right away. The big topic is going to be plant-based foods, right? And whether that's a fad or a trend or a paradigm shift. But before we get there, let's talk broad market firstly a little bit because people love your views. Last time we spoke, it was right when investor season began. We had a terrible small cap summer for multiple reasons. We're now in the small cap fall. How much better are things going than the summer? And is this as you expected?
Yeah, I mean, like I said, I think the summer was a bit more of like a death by 1,000 cuts for a lot of the small cap companies out there. But I think we reiterated last time we spoke that, you know, some of these companies need to also be able to have the ability to take a break and recharge the batteries internally and work on their businesses while the investor market goes away and sits in their cabin in Canada or in the US and actually gets a break as well. So I don't think that was a true reflection of where the market is going now that investor season or it's all back on. You know, I guess it's kind of traded sideways a little bit, you know, as we've just sort of got going. But if you have a look even last week, you know, there was closing of significant financings for a lot of the small cap investors. So, you know, to think we're 2 or 3 weeks into the hot period and that taking place is, I think it's a pretty good reflection of what we're going to see between here and Christmas. But look, I mean,
we've seen some massive moves
in
visibility. VSBY and the CSE, which traded in the low 40s, hit a $1.20 this week. Augmented reality, Imagine AR, that got beat up with somewhere around 8 cents, closed at 15.5, hit a high of 16. We're seeing that a lot. It seems to me, and you tell me what you think, investors are saying, holy moly, stuff got really cheap for no good reason in August. Maybe we should get back into some of these leading tech names. Is that just isolated to AGORACOM clients? You're saying that a little more across the board?
No, I think it's across the board. And you raise a good point there. I think August, it's normally, you know, discount shopping down aisle one. And it was more than just a discount. I think it was a Black Friday. It was pretty interesting to see some of these names really drop to, you know, significant lows. But like I said, it was, when I say death by 1,000 cuts, a lot of it was low volume over just, you know, a 3 or 4 month summer. Now we're sort of seeing that, I guess, the businesses are able to come and represent themselves to the marketplace of what they're going to see, what investors are going to see their businesses look like in 2022 and beyond. And like I said to you before, George, like I think a pretty good reflection of whether the market is going to continue to do well, hopefully for all the small cap investors out there, is, you know, the investment or the investment banking community or the banking community is engaged because there's financings being closed every day. So if that stops, then I think we'd be a little bit worried about what the future lies in small caps for Q4 and into 2022, but it's pretty hard to see that that's not going to, they're not going to continue to grow and be a good bet for some of us investors seeing what's taking place right now.
So two trends I want to ask you about, and then we're going to hop on to plant-based foods. First of all, small cap in general, between now and April, May, what's the trend? Do you think we're going to have another great Q4, Q1, Q2 like we did last year, or do you see it flat? Do you see it somewhere in between? What do you think that's going to look like in the next couple of quarters?
Yeah, I think it's going to probably continue. I mean, this is just my opinion, but I kind of think that it will probably continue to be a little bit frothy and maybe trade sideways a little bit. Sure, there's always in Canada, there's always the flavor of the month or the flavor of the quarter when it comes to a particular category or whatnot. Maybe that's the NFT market. Maybe it continues to be the biotech market or fintech. I'm not really too sure, George, but I mean, the way I sort of have played it through my own investing style is, I'm obviously more of a longer term portfolio player personally. I've liked to probably take control of a lot of my positions early in Q4. So like I've already sort of got a lot of them set and are prepared to sort of watch to see how they perform over the next couple of months. But I guess there's also always that elephant in the room where I find when you're in Canada, and it's what's going on with our neighbors down in the US. And there's a lot of talk about this infrastructure bill and whether they're going to increase the debt ceiling and all those types of things. I guess you've got to watch that pretty carefully.
You think that has an impact on small caps, though? You think that? I know it creates short-term market gyrations. You got the Dow and the S&P sell off for 4 or 5 days, and things like that. But do you think that comes all the way down to small caps, or do you have to have a bigger macro event for it to impact small caps?
Yeah, I think the bigger macro event always takes its toll on everything if that happens. But you're probably right there too. Does it really impact the small cap world here in Canada? Again, I mean, I look at it a little bit more granularly, and I like to sort of see how it's going to impact my portfolio, not just like in the next 3 months, but say 18 to 24 months out. So I look at it a little bit differently. But when you start to, I guess what I find is a little bit different now when they're starting to talk about like the property market and how things are going to start to impact interest rates or the inflationary metrics. I think that starts to impact on small caps because that typically impacts all of us on a day-to-day, right? In terms of our spending and what we're going to be paying in terms of our mortgages and how is the property market going to look? Are we over leveraged? So yeah, I mean, it's interesting times. Who would have thought that over the last 18 months, for example, we'd see the growth that we've seen, right? So I don't know if you can say, let's look at history and see if there's a pattern there, because I don't think we've seen anything like this in our lifetime, right? With this pandemic and some of the opportunities that have been put in front of us as investors.
I'm wondering if one of the impacts, and we won't get too far off because we're going to plant-based foods now, but I think one of the impacts that the pandemic had is a lot of people think, because investors stayed home, they had more time to look at the stock market, and that's why you saw a lot more retail participation in traditional capital markets like the small cap and even the non-traditional assets like NFTs and crypto, right? But I think the pandemic, I think that's too easy of an answer. I think the real answer is people realize their vulnerability and that their job and their future isn't necessarily set because they've only got one way of, most people just have a job and that's their only form of income. And I think people have woken up to the fact that I better be participating. I better find a way to get my money to work for me so that I'm not this vulnerable again. That's what I think has happened. So I'm expecting a lot more to come out of the small cap markets in the next, at least between now and May. Again, I think people are going to be realistic. So on that note, plant-based foods. Look, it was tongue in cheek, but the fact of the matter is I'm holding up a traditional piece of turkey right? Because I'm Greek, I'm a meat eater. But having said that, I've really started to experiment with plant-based foods, and I'm personally loving it. What are your views on two constituents? First, the consumer, and then investors. Let's talk about consumer. Is plant-based a fad, or is it a trend that's got staying power?
I believe it's a trend that's got staying power for sure, for sure. Have a look at how well Beyond Meat is done. I mean, how can you ignore a marketplace that's been created by a disruptor like Beyond Meat? I think the ticker is BYND.
Yep.
Look at what's happened to the shelves or the aisles in supermarkets now when you start to think about plant-based foods or just plant-based foods in particular. The category is growing exponentially in front of our eyes every time we walk down the aisles at a supermarket. People are obviously becoming a lot more health conscious. There's a lot more content out there about sustainability and how the ecosystem can still survive without us obviously being consumers of meat-based products. I don't know whether that has an impact. I mean, I'm here in Vancouver, and it seems like every second person is either a vegan or wanting to move towards that. Which, okay, I mean, I don't discriminate at all, but yeah, I think it's not just a fad. I think that fad stage is over. And if you have a look at now the names that exist in the US and in Canada of plant-based names, it's growing and growing and growing. It's a real category now. You can see that bankers are getting involved, and they're not just taking swings on Loblaws or any of the big sort of supermarket chains. They're getting involved with brands that exist within. So I personally see it as a real opportunity for the marketplace.
And are you setting up your portfolio? And we know that you take a longer term view, which, by the way, I think that's what everybody should do in small cap, because investing in small cap is investing like investing in startups in Silicon Valley back in the 70s and 80s. You don't invest in companies like that for the short term. You invest them for the paradigm shifting, absolute massive monster returns. So how are you looking at setting up your portfolio when it comes to allocating to plant-based food? How much of your portfolio do you think you want to eventually be at for plant-based, and what kind of timeline are you going to give it?
So I'm a really big fan of consumer product goods, CPG as we call it in Australia. Actually, I've had quite a lot of exposure to that industry over a period of time, working with brands that exist in some of the big chains down in Australia. We've got Woolworths, I think, which is the Safeway here of Canada, and we've got Tesco and Aldi and all of these sort of big retail chains. So I'm a really big fan. I understand what it takes to market and obviously capture a market share in that world. And it's not easy. It takes time. So I've invested in a couple of the names in Canada here, some that are not just brand-based, product-based, but that also have brick and mortar retail shopfront. So they're able to obviously then disseminate their brands or their products or their
control their own destiny a little bit more than just relying on distribution.
Yeah, exactly. Making sure that they've also got not just brick and mortar walk in, but they've got online presence as well. So it increases their opportunity to get their brands out into the marketplace. I guess with COVID, we've all been sort of withheld from shopping in our normal shopping environment. So I think we've seen a lot of these retail shop fronts that have Instacart and all these other online shopping models do well because they've had both, right? Obviously, if we haven't been able to go into a shop front, but we've been able to order our food online, and that's great. So I've sort of looked at a couple of names, but I'm looking at these names not just as are they a product or a SKU, but they've got a little bit more to their meat on the bone, their business model, as they say. That's kind of how I'm looking at it at the moment. Certainly not looking at it from a short-term perspective. I think if you really want to, you know, swing and hit one that's got a little bit more of a home run, then you've got to give it some time. You know, it's a new category. To go and compete against a Beyond Meat, for example, or I think it's Impossible Foods. You know, these guys have got serious war chests. You know, they've sort of come first. They've been able to capture quite a lot of the category. So some of these new guys coming into the marketplace are going to just need time to be able to penetrate and capture some of that market share.
But time is on their side, right? Because I've got the number here. The plant-based food market is expected to grow to 74 billion by 2027. So giving them that time is actually okay, because they're having time. They're getting time to grow into a massive market. What there are three names I want to talk about today. Organic Garage is one, PlantX is another, and Bouphe Foods is another. And they all kind of touch on your thesis there. Talk to us about Organic Garage. What do you like about Organic Garage?
Yeah, the thing I like about Organic Garage is they've really got control of their costing model. Their operational model is as tight as you could and as sound as it can be. You know, the executives or the founders of that business have generational. They've been in it for generations, so they really know the organic way. They've been able to really, if you go and have a look inside some of their stores, you know, they've really been able to optimize their shelf, their floor. There's not too much floor space there unused, which I like. They've been able to get rid of their centralized distribution center to save $1 million a year onto their bottom line. So like I said, the operators really know how to, they've calibrated their business over so long.
What's their specialty? What's their number one thing that investors should be focusing on?
Well, I mean, I kind of call them the Whole Foods light. So Whole Foods is obviously very big with thousands, tens of thousands of SKUs, big storefronts, you know, lots of staff. Their basket sizes are big. I guess with Organic Garage, if you think about the Whole Foods light, I think they run off about 8,000 to 9,000 products, which is a lot less than Whole Foods. But
still a hell of a lot of products.
It's still a hell of a lot of products, but they're just a bit more of a condensed version. They're in ideal prime locations in Ontario, and I know that they've got the vision to grow that. But they just make their decisions with a little bit more thought, and that's, I think, because they have to, because they're smaller and they're competing against some of these, you know, the big boys out there. I guess the other reason why I really liked Organic Garage is, if you think about, I think their market cap's, I don't know, maybe 30 million right now, and you know, they're trading at 1x revenue. It's pretty crazy.
Yeah, let's not forget about those numbers, because that's important. By the way, what's their stock symbol, Leigh, for everybody home?
OG on the venture.
All right, original gangsters.
That's it. The other thing that Organic Garage has, which is this is the opportunity that I think is the big one, is they've launched a brand called the Future of Cheese, and the cheese fromage, or the main guy behind that, is a guy by the name of Afram Pristine. And I know in Canada a lot of Canadians would know who he is, but he's one of the top chefs. Or when you think about cheese and you think about chefs, he's the guy from formulation to whatnot. I think he's been on MasterChef and on all these programs. Anyway, he's come up with a quality of product that, and I've had the opportunity to taste it, which is really, really quite phenomenal. They've got a brie and a butter line that they've just put out, not on the shelves yet, but soon to be. And the brie is something like no other plant-based cheese that I've tasted. I've tasted a lot of these brands and products.
Cheese is a huge category. It's a massive
They
category.
just haven't got, a lot of these brands just haven't got the formulation right. And you know, taste is everything. You can say what you want, but at the end of the day, if it doesn't taste good, you're not going to go and buy it again. It doesn't matter what the package looks like. So yeah, I mean, and I know from his relationships that he has in the restaurant business, and for sure with some of these big box, you know, retail outfits as well in food, I'm sure that if they get that right, then they're going to see a really big opportunity for distribution across multiple different demographics and geographic locations as well. I don't think it's out of the equation for them to think about Canada, but then think about the US and into Europe as well. So look, I really like Organic Garage. It's got both. It's got the brand, it's got the product, right, which it owns, because it owns Future of Cheese 100%. And then it's got its retail grocery outfit too. So you can kind of swing both ways with this one. And I think once they've got the actual sales of the Future of Cheese sorted out and distributed across where they want to get it to, I think you're going to see the numbers really hit the bottom line. And I think it'll just be a matter of time until they start to get a little bit more love. I think when I first saw them, they were a 6 million market cap in December last year or something, and trading at 7 or 8 cents. It just didn't make sense. I actually thought that there was an error in their financials, and rang the company, which is the first time I've ever done that, just to see if I was reading it right. But I was certainly reading it right. I just don't think the marketplace had sort of heard of them or really understood their model. So, you know, I think they've got a very good future ahead of them.
And that's a great reminder to everybody at home that Warren Buffett created the biggest capital markets empire in the world in history by being early and finding undervalued stories. So if you're first and you find undervalued, that doesn't mean you should wait to pull the trigger, and you didn't wait. So that's Organic Garage. Another two companies I want to talk about. First is PlantX. VEGA, VEGA is a stock symbol. I mean, talk about unbelievable growth, Leigh. For those who don't know, first of all, they're not just plant-based foods, they're plant-based everything, plant-based lifestyle, plant-based plants, believe it or not. And they're omni-channel. This is what I like. They've got the real world, like you said, they've got their own locations, they've got e-commerce, and they've even got distribution with partners. So let me give you some numbers here. This is why I love the plant-based foods industry. Last year, you know, around March, right around the time, you know, we got hit by COVID, but when they were starting out, they basically had revenue of, you know, nothing. By April of this year, they were over $2 million a month. All right, unbelievable growth. And they done that with some acquisitions, but also some great partnerships. They're in Walmart now. They're in Hudson's Bay now. They've got brand ambassadors like Serena Williams, who we all know, Justin Fields, quarterback of the Chicago Bears, and they just announced that they're uplisting to the TSX. And yet, still, a company that took a really big hit in the summertime was sitting in the low 20s, and is now sitting in the low 40s. But that's an example of a story, right, Leigh, where people were paying too much attention to stock price, not realizing here's a company doing $2 million a month right now and growing at an astronomical rate.
Crazy. You know, George, there's a statistic. So I was just looking whilst you were talking there, because I read a really interesting article. You know, it says why the shift towards meatless. And it said that COVID-19 may accelerate the shift toward meatless alternatives, and a big part of that was because of how damaged the supply chain, global supply chain has been, like with logistics and moving stuff around. You know, like the sustainable fish farming sector, right? Norway is the hub for that in terms of listing businesses and investments and injection of capital into that environment. Well, I'm very familiar with that space over there, and most countries now are having to take control of their own supply and thinking about whether they actually set up operations within their own countries, because they just can't rely on if anything like this happens again, actually the supply problem. So I think in America, just since COVID, plant-based meat consumption has grown by 264%. Which is
unbelievable.
Because you think about, and I'm just reading again, I think the plant or the meat-based market in the US could be worth, the global meat market, could be worth 2.7 trillion by 2040. It's a lot of money. But when you think about how much that plant-based meat market could become if you start to see some of these figures continue to rise like this, because people are legitimately concerned about and aware now of the supply problem with these businesses, then they've got no choice but to start to think about alternative, ways of consuming something that tastes like meat, I guess. But yeah, I mean, VEGA, there's Plant X, as you just mentioned.
VEGA's a stock symbol. VEGA, that's our stock symbol. But
It's a perfect opportunity for these businesses whilst we're in this shift, I guess, if you want to call it, to get some market share. Why not? I think we're saying, I mean, oat milk. I think there's a company called Oatly as well, or Oatly. I was reading another thing, like oat milk sales are up 447% in the last year. So people are obviously starting to get into.
But investors haven't really caught on though, have they, Leigh?
No.
Investors are lagging. Small cap investors are lagging.
Yeah, the very good
massive growth that's taken place.
Well, the very good food company, VEGI, like that's obviously been probably one of the bigger names here in Canada that has, done quite well. I think they're a $4 or $5 stock or something. They've raised a lot of money as well. They sort of started to get going beginning of COVID last year, and they've raised a lot of capital, and I'm sure that in a year or two's time, I mean, they're going into the US. In a year or two's time, you'll start to see some of these names or the real names sort of pop up. I mean, we haven't really seen any M&A activity happen yet either, too. So, like we see in Canada,
early, still early. That's going to happen.
No, it is. It's early. I mean, there's lots of different sort of macro reasons for this trend to continue to accelerate. I just think that people are becoming a lot more aware of, because of this last year and a half, the supply issue and how it can get impacted. I mean, meat prices have gone up as well, even though people might not see it. But a couple of percent here and there, every time you go into the grocery store adds up. People are becoming a lot more aware of what their residual income is going to be able to spend. So I think we're very, very early. I mean, it's
early, but a good time. Not so early that you're going to be waiting around. Early as in there's still enough time to catch a massive move. And one more company I want to talk about, because we've got about 2 minutes left. Is Bouphe Foods, VEGI, VEGI. I don't know if you know about these guys, but just another example of unbelievable what they do. They've taken comfort food, and made that plant-based, which is unbelievable. They got like veggie bolognese and sloppy joes and some unbelievable flavors that they've made plant-based, so you're not feeling guilty about eating anymore. And look at this. They've got a supply alliance with Beyond Meat. They've expanded to 400 stores in less than 18 months.
Yeah, it's a lot.
And they're award winning. So there's an example of a company of another plant-based foods company that is just growing under the noses of everybody, all small cap investors. And listen, I want to make sure everyone knows VEGA, VEGI, they're both clients of AGORACOM. We're not making any kind of recommendations, but these are the facts, right? Plant X is $0 to $2 million from in a year, $2 million run rate per month, and VEGI, which is Bouphe Foods, which is expand to 400 stores. Leigh, and we'll finish off with this. In your experience, how difficult is it for anybody to go from 0 to 400 stores of some pretty major companies like Whole Foods, Safeway, Metro, IGA in 18 months?
No, that's not easy. That's good going. That's very good going there. I mean, if you're bringing a product to market in a new category like this, I mean, there's that whole education experience that you've got to give retailers and consumers too, right? So, I mean, that's a very good number. I haven't I need to do a little bit more work on this, on that name for sure. But
And I got to do work on Organic Garage because that's great,
yeah,
great names.
I know we've got to finish up. So like, there's a few other ways that I'm looking at it too, if it's if it means anything for the audience. But there's obviously the meat and dairy alternative space, which we could call these products. But then, there's lab grown meat and seafood stuff now too. There's like allergy prevention. There's the sugar alternative market. There's the nutrition enhancement market. There's there's even fermented proteins and algae proteins. Like
wow.
the actual, let's call it the food tech startup world is getting quite large now. And I think that there's other ways to play it as well. I think the tech side of actually the production of these meat and seafood alternatives is also quite exciting, because without that, how do you get the product, to these companies? So they've got outfits that sit behind them, and there is a lot of different, like this lab grown meat and seafood vertical within the categories it's big business. I watched something on Netflix on it a couple of weeks ago. It's just big business. So
I'm going to wrap it up by saying this. Remember that McDonald's, when it came along, that spurred fast food for the latter half of the 20th century. I mean, nobody saw that coming. That was a mega trend. They changed everything. I think plant-based foods and what we're seeing today are going to be part of a mega trend for the next 50 years, because fast food, convenience food was the massive trend that went from zero to billions and billions and tens of billions of dollars. I think we're going to sell this interview as NFT one day, because people are going to look back and say, Leigh and George were talking about it back in the fall of 2021, that plant-based foods is the next monster trend in food that's going to last a decade. It's going to last 2 decades easily. And I'm glad we had a chance to kind of touch on it, Leigh. Obviously, there's so much more we can talk about, but thanks for joining us as always to kind of shed light your perspective and letting us know about Organic Garage, OG for everybody at home, to do their own research, right? Neither Leigh or myself are telling you what to buy. We're just telling you what to look at. And for us, you got VEGA, which is plant X. You got VEGA and VEGI, which is Bouphe Foods. Go take a hard look at them, and you can check them out on AGORACOM, because the numbers don't lie. Thanks a lot, Leigh. Thanks for joining us, buddy.
No worries. Have a good Thanksgiving, mate.
For everyone at home, hope you guys had a happy Thanksgiving. Thanks for joining us. And if you want, for those of you who are discovering Leigh for the first time, make sure you connect with him, because you can see his social media accounts right there on the screen on LinkedIn, Leigh Hughes. You can see his name right there. And on Twitter, do I got it right? At Leigh Hughes?
Leigh N. Hughes.
Leigh N. Okay, that's I got to get these readers jacked up a little bit, but make sure you follow Leigh, guys. He was first on so many stories that today everyone's celebrating, but he was first on so many of them. So if he's telling you to take a close look at plant-based foods, do your due diligence, and hopefully the experts have put you on to a next great trend. Thanks for joining us. Talk to you soon. Hey guys, this video is over, but don't forget to help your company by liking it and then leaving a comment below. And then don't forget to help yourself by subscribing to our channel so you don't ever miss another great AGORACOM small cap video.